G'day and welcome to this week's video. This week we're going to kick off a video series which will be the first of 3, and we're just going to look at some very simple superannuation strategies to make sure that you're not missing out on the easy wins, to make sure you maximize your tax saving and therefore the value that builds up in your super fund for your eventual retirement. Even if it's decades down the track, changes and things you do now to make and save money has a huge impact. So what we're going to look at is salary sacrifice, co-contributions, and also the lesser well-known one, which is the spouse contribution. So we'll check out the rules for all of those. But today we're going to kick off on a simple salary sacrifice into superannuation. So we're clearly just going to understand the tax rates, and you can see here that we've got a scaled tax system. So from 0 to 18,200 you pay no tax on that money, and then once you get over that $18,200 you then start to pay a percentage of your income as tax. And as your income goes up, as you can see here, it's going up, and we've got to add Medicare to these figures as well. So for the average earner, that's somewhere between $37,000 and $90,000 for this financial year, that's gone up from 87 grand. You're going to pay 32.5 cents as tax, plus Medicare, which is just another tax, so 34.5%. And as we go up, it goes to 37 plus Medicare, so 39, and then all the way up to 45 cents for every dollar over 180,000 plus Medicare. So when we salary sacrifice into superannuation, the money goes into our superannuation fund in a pre-tax, so you're using pre-tax money, and is not taxed at your marginal tax rate at 34.5, at 39 or 47, but it's taxed at 15%. So for most people that fall in this tax bracket, the $37,000 up to $90,000, where you would normally pay 34.5 cents on the dollar tax, you're going to contribute to superannuation with a salary sacrifice, a concessional contribution, or a pre-tax contribution, and only pay 15%. So that's nearly a 20% saving on that every dollar you put into superannuation in between that bracket. So it's 19.5% saving. That is a huge saving. It's no saving that in percentage terms that I can provide an investment and guarantee you would save nearly 20%. You'll make 20% each and every year. The one thing you need to remember, that we are limited to how much of these concessional contributions we can put into the super fund each year, which is $25,000, and that includes your employer contributions, your 9.5% your employer puts in on your behalf. So your super salary sacrifice plus your employer contributions is included in the 25 grand. So I hope that's a help. It's really important to understand your marginal tax rates and the levels where you kick over. If you get over $90,000, you might say, well, no, I'm not going to pay nearly 40 cents in the dollar tax. I'm going to salary sacrifice any money over $90,000 up to my concessional contributions limits. So understand the marginal tax rates, hit pause, have a good read of those, understand them, and then you can work out your savings, which can be substantial. Thanks for listening. Give us a thumbs up and subscribe to the channel. That'd be awesome. And next week we'll have a chat about co-contributions. Thanks for listening.